Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on PNB Housing Finance, the company that's reported a 23% year-on-year surge in its net profit for the first quarter of fiscal year 2026. Now, this is coming at 534 odd crore rupees. Of course, we are also looking at the lender's net interest margins for the quarter that now stand at 3.74%, which is also an improvement from the corresponding quarter last year of 3.65%. Now, the asset quality has also improved with the gross non-performing assets ratio now coming in at 1.06% at the end of June quarter, falling from 1.35% seen in the year back same period as well. Now, the pre-provisioning operating profit or the PPOP has grown by 17% year on year at 632 odd crore rupees. This is also buoyed by the 17% surge in the net interest income that's now come in at 760 odd crore rupees. What's more is that the company's loan assets have also grown 16% year on year, with the retail loans now standing above 76,923 odd crore rupees. Let's try and understand from the company what have been the key factors that have provided a steady and strong set of numbers in the first quarter, and whether this performance can continue and even escalate from here on. We are welcomed by very special guest joining in, Mr. Girish Kousgi. He's the MD and the CEO of PNB Housing Finance, and he's with us on the program. Warm welcome to you, sir. Thank you so much for being with us on the program. Congratulations yet again on the steady set of performance that's come in. In fact, we've started off the Q1FY26 on a strong footing. Could you detail for us what would be top 2 or 3 factors that you have listed out behind this performance, sir?
Okay, thank you very much. I think this quarter performance is not a one-off. It is continued momentum since last almost 3 years. So if you look at any quarter of last year as well, I think the company did very well. And same thing is true even this quarter as well. Typically, if you look at any year, quarter one is soft, slightly mild compared to other quarters. Yes, that's true for PNB Housing as well. So the remainder 3 quarters in this financial year is going to be far, far strong compared to quarter
Okay.
one. I think everything played out well. Margins were stable, PAT growth of 23%, GNPA, almost flat, maybe slightly came down. Then net interest income went up, total income went up. OPEX was again maintained, expenses were down. I think overall it was a very good, I think very good set of numbers in quarter one, I must say, and this will continue.
Okay, so even in the seasonally weak quarter, you managed to put out decent numbers and you're expecting next 3 quarters to be far better than this one. How are you reading the demand on ground, sir? Let's try to understand that and then we'll come to the overall guidance on the numbers front as well, especially for home loans and especially post the recent rate cuts that have come in from the RBI. How is this demand situation on ground, sir?
So demand in all the segments, super prime, prime, emerging and affordable is good.
Okay.
And it is not just now, this is since last couple of years. But in last year, there were a lot of intermittent challenges. So because of the challenges, obviously, if you compare business booked in last year by the industry was on the slightly lower side. Industry was growing at about 13 to 13 and a half, 14%. Last year, it was a notch lower than that. That is not because of the demand. That is only because of the challenges which FY25 saw, which the entire industry saw. So I would say demand is quite robust, and this year is going to be far better because this year we anticipate fewer challenges compared to last year.
Okay, sir, how much of the rate cut have you already passed on to your consumers, and has that impacted in NIMs in any fashion? And because I ask you this because you've already upped your guidance for NIMs. So what will help you achieve that in this lower interest rate scenario?
So earlier we had guided NIM between 3.6 to 3.65. Quarter one was 3.74. So we have revised the whole year guidance to around 3.7%. Now, a rate cut, if you look at repo cut last 6 months, it is 100 bips. So this was not anticipated, slightly higher than what was expected. But yes, we were working on several things to try and improve our yield. Right. So, we stopped super prime couple of years back. We slowed down our growth in the entire prime business. We started affordable. Today, affordable book is almost about 5,750 crores, and the growth is very fast in affordable. We started emerging last year. It has taken good shape. It's doing pretty well now. And also within each of these segments, we are trying to increase the yield. Today, we are present in three segments, that is prime, emerging, and affordable. We started new vertical this year called as loan against property. So our focus now is more on emerging, affordable, and loan against property. Prime, consciously we are not growing. We are keeping the growth pace little lower. Actually, it's a balancing figure. We have guided 18% growth.
Yeah.
Just to see that what fills up, we will try and do prime business. Otherwise, prime is not a main focus segment for us. So because of all these things, uh, repo cut impact was not that much. Having said that, we have got benefit of 8 bips because of repo cut, because banks do take time to try and pass on that benefit. So we'll be passing on benefit of 10 bips effective July. So that's the
Okay.
impact. So cost of borrowing for us has come down by 8 bips, and we are passing on 10 bips to our customers effective 1st of July.
Okay. So on affordable housing, could you tell us about the AUM? Your target initially, if I'm not wrong, was about 9,500 crores. And you had also guided about 15,000 odd crore rupees by FY27. So just wanted to understand, is there any improvement on that, or are you sticking to that, sir?
No, we are sticking to that, no improvement on that, because we told that by FY26, our affordable book would reach 9,500 crores, when the book in March 25 was 5,070 crores. So it's almost doubling, right?
Okay.
And by FY27, this book will reach 15,000 crores. So we also had told that by FY27, our retail book would cross 1 lakh crore. Out of 1 lakh crore, affordable will be 15,000. Emerging would be 25%, 25,000 crores, and the balance would be prime. So now we are slightly changing that, because in last quarter we have moved 20 branches from prime to emerging, because these locations are of emerging segment. We have an opportunity of originating at a higher yield. So because of this, if you look at the mix in FY27, earlier affordable and emerging was 40%. Now it will be close to 50%.
Okay, so you're saying 1 lakh crore, sir, for your entire retail book by FY27. You're sticking to that, is
Yes.
something that you're mentioning. Any suggestion on any quarter, by which quarter will you achieve that, and at what rate of growth? You were initially penciling 18%, right, sir? So what is, are you penciling in any higher growth, CAGR for this one?
1 lakh crore, with the assumption that the growth is going to be at 18%,
Okay.
but looks like we might breach that.
You might surpass that. Okay.
Yeah.
Now help us understand, sir, on return on assets. What's the outlook on that, sir?
So today it is at 2.57. Now we have lot of support from recovery, because we have a decent recovery pool both on corporate as well as retail. So this would support us for next 4 to 5 quarters. After that, our overall credit cost is going to be about 25 bips. So
Okay.
by March 27, we would not have anything to recover, or we would have very less to recover, and credit cost will show up, which will be about 25 bips. So we have told that by FY27, our ROA would be 2.5 to 2.6.
2.5 to 2.6. What about asset quality, sir? You've been able to improve that in this quarter. What are you comfortable with for, and what do you end the year with on the asset quality front, sir?
I think we'll be in the range of 1 to 1.10, because given the mix, 1 to 1.0 is a very good band asset quality, because it's not just prime. We are into emerging, we are into affordable, right? So today it's 1.06. We might get to 1%. We'll try to maintain at 1. I think 1 to 1.1 is a good band to be in, given the mix.
Okay, wonderful, sir. Thank you so much for being with us on the program, sir, and helping us with all your insights. I wish you all the very best for the upcoming quarters, and we'll sure be looking at you surpassing your own guidance when it comes to the retail book. Thank you so much for being with us. All right, viewers, I hope this has given you enough and more clarity from the management side on PNB Housing Finance, the earnings that have come in, what are the key growth drivers, what is helping the company consistently grow at this pace. They are also confident about surpassing their own retail growth guidance of 18 odd percent, but 1 lakh crore rupees of a book being seen on retail loans when it comes till FY27 is what they are looking at. They're also giving us a band for NIMs, and of course asset quality they've wish to bring it down. 1 to 1.1% is the kind of band that they're looking at going forward from here. I hope this has definitely helped you out in understanding the growth path and the trajectory that the company is going forward to. We'll continue to get you such fascinating insights from the world of earnings, so do stay tuned on to Business Today Television, and of course the market coverage continues. I'll be back at 3 p.m. for the closing edition, so stay tuned for that.